Hello, I'm Ed Rapp, Caterpillar Group President and CFO. I'm pleased to report today a great start to the year as we announced a strong first quarter with profit per share of $2.37, an improvement of 29% and an all-time record. Sales and revenue totaled $16 billion, or a 23% increase from the first quarter of 2011. Additionally, we announced an improved profit outlook for 2012. We expect profit per share of about $9.50 at the middle of the sales and revenues outlook range. While the outlook range for sales and revenues hasn't changed in total for 2012, we're seeing an interesting change. It's actually better sales growth in North America driven by replacement demand that is helping offset slower sales in China and Brazil. Based on changes in economic policies, we expect sales to improve over the longer term in both China and Brazil. All of this growth has been good for jobs, as our global workforce increased to almost 156,000 people at the end of March, this being the 9th straight quarter of workforce increases for Caterpillar. The quarter was also strong from an execution of our strategy perspective. A few examples are benefits from the Caterpillar Production System positively impacted safety, quality, and delivery performance for machines, engines, and parts, with many metrics at all-time highs. Our first quarter consolidated operating profit margin percent was the best it's been in years, as efforts to control cost and deliver efficiency improvements are directly showing results. Tier 4 products designed to meet stringent environmental regulations continue to deliver value with strong, favorable customer feedback. But despite the outstanding execution on most fronts, our inventories were higher in the first quarter and require additional attention. For the quarter, much of the increase was in finished goods to support our 2012 outlook for sales. It's an area that will continue to get our close attention. Although our inventories were higher, other elements of working capital performed well, and our debt-to-cap ratio improved to 40.5% as we continue to build balance sheet strength following last year's acquisition of Bucyrus. During the first quarter, we also continued to build out our business model and announced new production and parts distribution facilities, expansion of existing facilities, select acquisitions, and divestiture of 3 former Bucyrus distribution businesses to certain Caterpillar dealers as part of our Bucyrus integration plans. It's been a busy quarter, clearly focused on execution of our strategy. In closing, even though we are navigating through some uncertain times, demand remains strong in much of the world, and at the end of the first quarter, our order backlog was at an all-time high. We remain on track for another record-breaking year in 2012. In spite of the fact U.S. construction activity remains depressed, and economies in parts of Europe, China, and Brazil have slowed. Our outlook is based on improved North American sales activity and longer-term improvement in Brazil and China, as both governments have made moves to improve their economies. That's why we are continuing to invest in the business. More detail on our results is available in our first quarter financial results release, which is posted in the investor section of our Caterpillar.com website. Thank you for your time and your interest in Caterpillar.